But I think the institutional allocation to Bitcoin in the base case, I know at one point we said 2.5%. That may have gone down a little. But if we're right, that assumption alone, I have been in the markets for a long time. And as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%.
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discuss about Bitcoin. Cathie Wood says, I believe that the institutional allocation to Bitcoin in the B case is currently at 2.5%. I know that at one point we stated that it was at 2.5%. But if we're right on that assumption alone, I have been in the markets for a long time. And as new asset classes evolve, institutions in particular tiptoe in by starting with 1% and moving to 2%, 2%, and finally 5% Tesla Square have a Bitcoin on the balance sheets. But we make very cautious assumptions, and I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin. And the bull case is 5% if we're right. And the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up, and lots of things Cathie Wood discuss. So please watch the video to end, and like, share, subscribe our channel, Everyday Finance. Thanks.
So now with the ETF, what is going on? I think, we know the research people at the SEC, and they know what they're talking about. They are really good. We've met the head of FinHub now, who reports directly to Chairman Gensler. And for me, the disconnect is they know so much and they are so good that I believe this was much more Gary Gensler standing in the way. I don't know for sure, because they could never say something like that. I just know from how we have discussed Bitcoin with them, that they really understand it and they understand its merits. Most important. So this is Gary Gensler. Why he allowed, and I will say he, because I think he's the gating factor here, why he allowed a Bitcoin futures ETF, which involves counterparty risk, and not a Bitcoin ETF, which does not involve counterparty risk. In fact, it is backed, ours would be backed by Bitcoin 1-for-1 in cold storage at Coinbase. That's why Grayscale has won its case. It is that argument. And so I think Gary Gensler's personal Vietnam is coming around to haunt him. I do think the SEC is moving now. He has, in effect, said, hey, I'm not the only decision maker. There are 5 commissioners here. That means some of the research that we believe is percolating up to those commissioners might be getting through to them, and might be the grounds now for the approval of a Bitcoin ETF. And we don't think that the SEC will approve just one. They will probably approve a group of them. And that means it will become a marketing battle. And we do hope that our research, how much we give away our research, mostly because we feel it very important to educate. It's one of our mission and values. We hope that helps us as we, hopefully being one of those approved, go out and start marketing. It could happen this year, given the movement we're seeing. I think most people would say it will happen early next year, but it could happen this year. Okay, so we are partnered with 21 Shares. 21 Shares is the largest crypto ETP provider in the world, based in Switzerland, and they have put in place an infrastructure that is proven. They also have their research. and which comes at the world more from the financial products angle. Our research comes from the world of let's pull this apart, really understand it, and explain it to everybody. So you've got both kinds of research, and I think our research is the most prolific. I mean, our first Bitcoin blog, no, it was a white paper, was in 2015. And then in 2016, we collaborated with Coinbase on a paper called Bitcoin Ringing the Bell for a New Asset Class. The first paper was, could this serve the three roles of money? And so we have been researching since back then, and I can tell you, we were new in the ETF world in 2015, and ETF journalists at the time said, oh, great. They put something called GBTC in their ETFs. Bitcoin, what the heck? This is just a marketing gimmick. And here we had our research. Clearly, they weren't reading it. And so I think we've proven our stripes, and we are offering so many services. The Bitcoin Monthly, the crypto brainstorm, which is monthly, featuring people who are working they're sort of in the background. They are making this happen. We want to highlight them and give them the credit they deserve, and give them an opportunity to come forth and talk about, how they see the world evolving. Our last crypto brainstorm was on the convergence between Bitcoin and artificial intelligence. And I would highly recommend that one, because, and you'll see me in there saying, wow, I can't believe this. We've got, I think I summarized it by taking two phrases from that others had contributed. So the scarcity of Bitcoin juxtaposed against the infinity associated with artificial intelligence, and kind of and how this could proliferate throughout the world and provide, division of labor, jobs, deeply into the emerging markets. If you're interested in learning about that, tune into both of our first two crypto brainstorms. Yes, if you look at the little table on that page, you'll see the building blocks and how conservative they are. I think, now this is from memory, and sometimes I get one big idea and another mixed up, but I think the institutional allocation to Bitcoin in the base case, I know at one point we said 2.5%. That may have gone down a little, but if we're right, that assumption alone, I have been in the markets for a long time, and as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2%. And then they migrate to 5%. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets. But we make very cautious assumptions, and I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin, and the bull case is 5%. If we're right and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So remittances is another very big market. We assume 10% of remittances in the base case and 25%, instantaneous, no fees or minimal fees compared to 8% fees as migrants send back to their home countries. Mm-hmm. Sovereign treasuries, 1%, only 1% in the base case, 5% in the bull. Just like corporate treasuries, they'll be under pressure to start increasing their exposure to Bitcoin. And emerging markets, not just the state treasuries, but all of the populations who are subject to these swings in their currencies and absolute demolition of their wealth when they go through hyperinflations. We assume 3% of the populations in the emerging markets, 3% of their assets in the base case go to Bitcoin and 10% in the bull. So those are some of the cases. And then there's the other utility economic settlement network case, and that's 5% of all settlements in the base case and 10% in the bull case. So that gives you a sense of how we have built those two estimates, and those are pretty conservative assumptions, we would suggest.